day everyone, Les here from BG Trading. Hope you are well. Today is January 24th, 2024. And we're going to be analyzing some of the stocks that our members, viewers, and people linked to BG Trading have been asking us about whether should be buying, selling, or holding. Obviously, with reporting season just around the corner, some of these stocks have already given us a hint of what first half of FY24 will be like. And then major movements have already started. So we're going to talk about Polynovo, Kogan, Zip, Terracon, Appen, and also Megaport. So most of those stocks are high quality trading stocks, okay, except for Appen at the moment. And I'm going to go in detail on the chart formation. Most of these analysis will be focused on the technical and not much on the fundamentals, although I will highlight some of the key points if you are doing a multi-dimensional approach. Fundamental, macroeconomic, and technical, what you should be considering in order to increase the probability to have a good trade. So let's have a look. Before that, remember this is not a financial advice, it's just as from BG Trading, sharing with you how we apply our strategies to chase 20 to 40% within 1 to 3 month lead time. Remember that we look at the stock market as a trading opportunity. We don't like investing on the stock market, and that's as a result of the high levels of manipulation. We think long-term investment should be mostly focused on real estate, property market, commercial, residential, anything like that. Also like to invite you to become a member of our free Facebook community, buy, grow, sell strategy for share traders, and follow us on Facebook, BG Trading as well, our page. Okay, now let's start with S&P ASX200. Sorry, I'm making around a little bit because I'm improvising quite a lot on this video. Not much of a speech already recorded. So S&P ASX200. So if you have been following us long enough, you know I have been analyzing week by week the S&P ASX200, and this particular week we had a bounce with some markets around the world hitting record highs. We are now with this particular reversal here, right here at the end of January. You see those two green candles on the Heikenach. Remember that we use Heikenach. So we have what we call bullish intersection level 2. With bullish intersection level 2, this is the second signs of reversal. So we tip for a correction. That correction was confirmed, was great, about 3.6%. We actually expecting a little bit higher correction, but didn't happen. That's fine. We took 7% profit in BBOs. Take a look at these. Real trades with real results. That's all about BG Trading. So let's find this BBOs right here, guys. Just don't let me lie. Yes, fantastic. 7.26%, and we reduced that. That's when we closed most of our position, not all our position, but we're still holding some BBOs, not much. But we decide to sort of lock in profit and buy some stocks at the lower price, because those stocks that have been mostly affected by correction. Okay, so obviously I'm not going to tell you here right now what are the stocks that we bought, because that's what our VIP members have access for, and they pay for that information. But what I can share with you here is that this chart formation now looks very bullish, and and potentially we might have a breakout if we start testing 7,600 on the ASX200 index. We might have a breakout. If you have a breakout, then obviously this correction is my tiny correction is over, and then if you have a breakout, it could go well. Probably will see 8 in front of the ASX200, so maybe 8,000, pretty much. That's what I think. Anyway, we keep following the chart. We don't know exactly what's going to happen, but we know there was a reversal, and then we close our position, lock at profit, and now we in full positions with our stocks. Let's start with PolyNovo then, PNV, that's the ASX code. If you've been following us long enough, you know this is actually our one of our longest held positions, because we bought in September, end of September, right here. You see, with those open this reversal, and then it went down again. But then, as results continues to pop up quarter on quarter, we saw that the company has been improving every single quarter, solid results, and even though some of so-called analysts were skeptical about. The CEO mentioned in the last financial report, not in the report, and actually on a Q&A after the release of the financial report back in September, the CEO said that the company would be profitable by FY24. So we've been having confirmation now, and obviously if that happens, we will see, most likely, obviously there's no guarantees in the market, most likely we will see PolyNovo well above $2 for a good period, from potentially now and the end of this financial year. So for us, this is a long-term holding stock, and obviously we're holding longer than expected. That's because obviously there was a fall here, but still we didn't take stop loss on this particular position. Remember, we normally take stop loss in speculative trades. Companies that don't generate revenue, we just buy from the hype or from the chart formation. But this particular company, this is a high quality business, high quality company, and then definitely now we are 33% up together with some of our VP members, and that represents a very successful holding position already, and we think it's gonna go well above $2, even potentially hitting 240 again. That's our expectation. We're very positive about PolyNovo. Should you buy PolyNovo? I don't know. That's your decision. We just put in here a bullish intersection, breakout of this hypothetical resistance level. Now finally trading above the SMA 250 and the TSMA 240 as well, trading a bullish side with ascendant RSI formations. Most of our technical indicators, all our technical indicators pointing for further rally. Let's see if that is confirmed, and I would love to come back in 3 months and say I told you so, because then you would probably have made money, and we will certainly, if that happens, certainly we'll have we will be making good profit out of that. Now, second one is Kogan, KNG, Kogan.com. This is another company that has been reporting really well despite multiple interest rates high. And here is what happened with most of those retail companies. After COVID, during COVID, they stocked a lot. Some companies even opened more warehouses during COVID to be able to cope with the demand. But after COVID, once once people could travel again, so disposable income stopped going straight into retails like this, and that's why we had this huge, like seriously huge crash from $24 a share to even $3.80 or something. And then obviously now we have a solid not just fundamental improvement, but also technical improvement. And if you look at this range, what you want to be buying Kogan is at the bottom of this ascendant trading range, which also represents buying opportunity at technically discounted price. If you don't know what technically discounted price is, I strongly recommend to go to bgtrading.com.au, take a look on our online courses, and go trading mastery. I will teach you everything about how to buy stocks at technically discounted price, technically fair price, or how to avoid buying stocks at FOMO area. I teach you how to identify those critical technical levels, and you really need to be prepared. You need to know that in order to increase your probability of succeeding in trading if you are looking at trading on the stock market. But again, like anything, I just want to remind, all those stocks that we're looking at, they are a trading opportunity. Some will take 1 to 3 months, and we chase only 20 to 40%. But other stocks like Zip, we are now holding Zip at 52% profit already, and I'm going to go in Zip next now, and then we, like, obviously we are greedy as well, but we believe that some of these stocks could outperform our proposed BGS20 target. In fact, Zip is one that already exceeded 2 of our BGS20 targets that we did, and we've been trading. I'm gonna show you later. So now this is bullish engulfing again. Like you see, I've seen this one tested this ascending support level, and then we had once again, and it looks like we have almost like a double bottom test with really strong pullback to the upside, and that's for me shows me a lot of confidence. And combined with the fact that we have a favorable fundamentals, the company has indeed improving its numbers for this first half of FY24, then decreasing inventory, a lot of costs being cut as well, and become profitable with buybacks in all through the first half of FY24, that enforces the fact that this could be another winner if we buy at the bottom of the channel, which essentially now, as this is a really good hint, guys. Essentially now for me this is a buy. No doubt about Kogan is a buy for me. The only threat here, the only danger on this type of stock is if eventually inflation kicks off really badly again and RBA increases the interest rates once again. Everything looks like they're going to cut at least once in 2024. The 4 big banks, all the 4 big banks are tipping for at least 1 interest rate cut. Some of the 4 big banks are tipping for 4 interest rate cuts over the next 12 months. But let's say if we have 1, so we just into that part of the cycle that is favorable for retail stocks after this huge fall as a result of interest rates hikes. Okay, so I think the worst is behind for Kogan at the moment, and this is, again, for me, is incredible good opportunity at the current levels. Even though, if you ask me, even though it's up 14%, you know, there's a reason it's up 14%. So my suggestion is take a look on the potential next few days. It might goes down a little bit, and I think that would be an excellent entry on this particular stock if you haven't actually bought already. So let's go to Zip. Zip is another stock that everyone is asking, obviously, because we're holding a huge position on this particular stock. And we've been trading over and over, and this is our 3rd time trading in the last 3 months, and essentially what we're doing here, we are holding the stock since the sort of since 38 cents pretty much. Yeah, we bought first position 38 cents, then we sold half, then we bought it again, and we sold half, and then we bought more than double. So we tripled our position, and then we took advantage right here of this huge sort of rally. Obviously, you'll be lucky because the results was very compelling. Some people said, "Oh, that was not very impressive." It is. Remember, Zip is a growth stocks, and they with 2 quarters, the first 2 quarters with a positive EBITDA. And again, like if we have that consistent in the next 2 quarters, we could even see Zip become net profitable by the end of the year. If that is confirmed, then Zip is certainly in a far better position that has a financial position than it has ever been, and even when it's worth $14 a share. Whether this is gonna go to $14, I don't think it will, but I think definitely something between $1 to $2 is a very achievable for Zip, with all the key 3 fundamental metrics. When I talk about fundamental, I'll talk about actually the key metrics that we look and that we try and merge together, which is the technical aspect, bullish, the fundamental aspect, improving, and also the macroeconomic favorable with Fed cutting rates. Remember, these guys are fed with a warehousing funding, and they need the money to come down. If the cost of money comes down, they will even improve its profitability more, which will give further upside to the stock. Now, people are asking me whether this is a reversal, strong reversal, but I wanted to remind you that we normally like taking our approach, our view, using the Heikenach candles. And if you look at the Heikenach, it's still green, it's still no signs of reversal. So we don't want to be rushing into selling the stock. The stock that is doing pretty well from the 3 key metrics that we look into, and just sell it. As I said, I think it's a good opportunity to sell. Maybe if it touches 80, maybe sell half and then try buy it again, like we did a little bit today. We sold a part of our holdings at 79 cents and we bought back at 75 cents, and then obviously our second position is down now. Our average from 48 cents are now about 52 cents. That's my personal account actually. And then we want to stick with this stock for at least the next 3 or 4 months to see how things, whether Fed really cuts rates, whether inflation really keeps coming down, and definitely could be huge, still at 72 cents. I think it's fundamentally and technically, either fundamentally discounted price as well as technically discounted price at moment, okay, for the reasons I just had said. Now, having said that, let's move to a completely different area. We're gonna talk about Terracon, which is a coal producer. Okay, so with coal stocks, first thing you gotta see, it's looking at the fundamentals. These companies, they actually are net profitable, but the company hasn't actually declared whether they're gonna cut dividends yet. So they're reducing the dividends, but not sure whether they're gonna cut dividends. So which means if the yield of this particular stock at the moment is it's 14%. I even actually have a analysis put together for our VIP members. Just gonna go up here, just take a look on the key highlights for you, and this is a highly asked, very often asked stock, because we recently trade with Haben for 23-24%. And also holding Yalco at the moment, which is another coal stock. But this particular one, what we need to look at is that this particular company has a tracking record of paying strong dividend returns. Okay, as I said before, 14% yield at the current price. Okay, but when you look into the yield, you're always going to be effective calculation. You gotta make sure you look forward. Look, what is the likelihood of the company to keep those dividends? And I don't think that's gonna happen. This yield is gonna be reduced dramatically as a result of this price decline, I would be looking at potentially 7% yield for this particular stock at the moment, and that's a result of low coal prices. Okay, results, the outlook for 24 for this particular company, despite the recent coal price drop, the company expected the demand for thermal coal will remain strong in the short and long term, and not just this particular company, but other players as well. And the good thing with coal stocks, they keep going down and up and down, up and down, up and down, and that's giving so easily 20+%, and that's why we come in with our strategy. As soon as we see reverse at the bottom of the ascending channel, we go there and bang, buy the stock, trade it, lock it in profit, and move forward. So according to research conducted by Terracom, it is believed that coal is expected to continue to play a critical role in underpinning economy activity and energy security for decades, with Asia dramatically increasing the usage of coal as thermal energy. So outlook, it's good, not great, but it's good for this particular company. Obviously, they will reduce dividends somehow because the net profit will decline, and how much they're going to reduce, we're not 100% sure yet. But this comes as a red flag, because if by memory what we did here, the company pays a certain percentage of the net profit for its shareholders as dividend. If net profit decline, then obviously the dividend will decline as well. He's actually the payout is here. The dividend payout ratio is between 60 to 90% of the net profit after tax. And as I said here before, we don't see a confirmation in the we wanted to see the confirmation in the upcoming half-a-year report. So let's see how it goes, But at the moment, looking at the technical aspect, I said I was going to talk about technical mostly, but I got a little bit excited. It is, we want to be buying this under the red line and the pink line, which means currently trading at technically discounted price is a buying opportunity. Yes, this is another buy. So we have two buying opportunities here in this video today, which is one is Terracom, obviously hoping for coal prices to keep steady and moving up, and Kogan at the current price. I wouldn't be touching Polynovo now. I think you missed the boat. And OZIP is too high at the moment, so for the chart formation. Okay, so let's move to the next one, which is Appen. This is huge. A lot of people asking about Appen, so let's have a look. Here a second. Appen, APX. We traded a couple times right here, and we took stop loss right here, just under $2. And that shows, first of all, that we don't get right all the time, because even though we have the chart formation, the fundamentals play a huge role. And I'm sick of hearing or seeing or reading people saying that fundamentals does not matter for trading. This is the biggest proof. Fundamentals do matter, and you must stick with fundamentals equally if you want to have a good chance of succeeding. All the technical formation was highlighting for a potential rally and recover on the share price didn't happen because the fundamentals didn't let that happen. And the company has recently reported that one of the biggest, actually the biggest account, Google, has pulled it off, and they will stop using Appen. They're holding back on any deals with Appen, and which means 1/3 of the revenue is gone for the company. Huge loss for shareholders. Even though it's 17% up today, I would not be in touch in this particular company at all, even though it's trading a technically discounted price, even though the macroeconomics are favorable for this type of stock. So we have one of the three pillars that we normally look for the highest chance of success, which is the fundamentals, cut it out of this, so not favorable. So it's not enough to attempt a entry right now. So I wouldn't touch on the Appen at all, even though it's a technically discounted price. If you want to buy, that's your own risk, okay? This is the reasons. Now, the last one is MEGAPORT. MEGAPORT actually reported, it should be reporting reasonably well. Obviously, this stock has rallied quite substantially. We did trade this stock, and we made, I think it's about 30%. I don't remember. It was trading around June, July, something like that. And the stock went up 200%. 200% in 2023, and then we had a correction. The correction brought from August to now 31% down. Now, the big question is whether there's more juice, more rally, the more upside for this particular company. In fact, I think there is. Okay, the big question is what's gonna be the shareholders' reaction for the upcoming results in 30th January. Yes, just pretty much a week ahead. Next week. So the company will be reporting its first half, okay? Then we could have a major disruptive movement, even to the upside, even to the downside. My concern here is that because we had this 200% rally back in 2023, whether a good result will be enough to pump the stock 20 or 30% unless it's a huge result. But I'm just worried that a good result only, not a huge result, just a reasonably good result could trigger further sell-off. Could be a, let's say, is good result but not as good as expectation of the shareholders. So just gotta be tracking, gotta be careful here. We have a bullish intersection. The technical formation looks pretty good, and it looks like we have 24% range to trade right there. But should we trade that? That's your own risk. Okay, it is trading at a technically fair price according to BGS 20 strategy. RSI looks favorable, but I'm just concerned about what's the next results going to be. So the ideal situation here for MEGAPORT is, say this on next week, if the company reports a positive result and the stock falls, then I think we buy in the next reversal at technically discounted price, hopefully around $8. I think that would be a great entry, even though if the company reports well and the share price falls. That could happen. We see many times companies reporting well but not as good as expected. And again, I'm only saying that because this particular stock has rallied 200% already from its ultra lows here from 2023. Yeah, it is a buy opportunity, but the big red flag is just to look at straight away what's gonna be the reaction in 30 of August. 30 of January, when the company reports its first half of financial year 2024. Guys, thank you for watching. Hopefully this was valuable. Let us know your thoughts. If you agree, don't agree with particular stocks, what is your view? Remember, this is a high-level analysis. It's not in depth. Some of the stocks we go in deep, but then this is obviously exclusive for our VIP members. I just wanna share with you our position on those, our view on those 6 stocks, based on the chart formation and briefly macroeconomics and the fundamentals. And now remember, the macroeconomics for companies like MEGAPORT is favorable because this is a tech stock. Tech stocks tend to go up with lower interest rates. Guys, I'll see you in the next video. Have a fantastic afternoon.